if we've lost our leadership in the market, what happens?
Yeah, that is a great question. It's interesting because, for so long this rally, years, not months, has been led by technology. And when technology fails, you see just how far these stocks have moved in a short period of time. I think three things have happened in short order. Over the summertime, we lost leadership in semiconductors. I think that got amplified in August when KLA came out with a warning about demand. So the semiconductors, one of the leading edge groups in technology, losing some of that momentum that they had seen, bled right into the social media names, which are obviously coming under a lot of pressure, regulatory oversight, not being able to keep our data safe. So you combine semiconductors and social media, and technology in general started falling long before this recent market sell-off. So we've lost technology in terms of leadership for a while here. I don't think it is forever. I think the problem is right now when momentum moves in a direction, it's hard to see when that stops.
But what should be happening then is you should be buying value, right? You should be buying energy, you should be buying financials. That should take the leadership. That has not happened. In fact, this month it's utilities that have actually been the best performing despite those higher yields on the S&P. So what do you do?
Well, I can tell you this, three things. First and foremost, that growth versus value argument's been one that's been going on for 8 years. It's hard to know if this particular downdraft in the market is going to be what resolves that. I don't think so. I think that what is going to resolve this is just finding a place at which the market has checked enough boxes to say we're currently washed out in a correction. I think we're in a correction in a cyclical bull market, and I think that what will continue to happen is intermediate rotations. So that move to defensive names, as you just mentioned, utilities or consumer staples, I think is very short-lived. I think both of those groups are very expensive here. I think if investors are feeling cautious right now, either coming in the midterm elections or looking at trade policy, I think the better investment is to move into cash and not move into some of those defensive areas because I think they're very overvalued. But I do think this is something that will work itself out. The problem right now is we've got two sets of policy that have investors very nervous. Monetary policy, certainly, there are those that fear that the Fed is agnostic to anything going on in the world and going to continue to raise rates regardless of what's going on in the economy, especially with some signs in auto and housing that look a bit punk. And I think on the other side of that is trade policy. And we just heard yesterday rhetoric around not being anywhere close on China. So I think that any resolve on either one of those two policy concerns, and I think technology picks up leadership again, but that may not be until 2019.